The U.S. stock markets are currently closed for the Thanksgiving holiday, meaning the numbers you are seeing on your screen right now are final from the last trading session. Datavault AI Inc, trading under the ticker symbol DVLT on the NASDAQ, closed the last session at exactly $2.13 per share. In the final movements of Wednesday's trading, the stock slid by $0.08, registering a decline of 3.62% for the day. While the after-hours market showed flat movement, maintaining that $2.13 level, the intraday action before the holiday break tells a story of extreme tension, high volume, and a company undergoing a metamorphosis so radical that the majority of retail investors have not yet fully processed the implications. You might look at a $2 stock and see just another micro-cap volatility play, a risky lottery ticket that moves on rumors and whispers. That is the expectation, that this is just another small tech firm trying to survive. The reality, however, is shattering that assumption in real time. We are not looking at a standard struggling tech stock. We are looking at a company that has effectively just reset its entire existence through a massive Bitcoin-backed capital injection and a strategic pivot that blurs the lines between artificial intelligence, cryptocurrency, and data monetization. The drop of 3.62% you see is not a sign of disinterest. It is the market digesting a massive dilution event that simultaneously flooded the company's balance sheet with hundreds of millions of dollars in assets. This is a situation where the price action is masking the fundamental explosion happening underneath the hood. To understand why a seemingly obscure stock like Datavault AI Inc is commanding this level of detailed scrutiny, we have to look at the sheer violence of the recent volume and corporate restructuring. The company, formerly known as Summit Semiconductor and famous for its WiSA wireless audio technology, has effectively ceased to exist in its old form. It has rebranded and re-engineered itself into Datavault AI Inc, and in doing so, it has executed one of the most aggressive financing maneuvers seen in the small cap space this year. The headline causing this friction between buyers and sellers is the completion of a deal with Scilex Holding Company. This wasn't a standard cash for equity swap that you might see when analyzing Tesla stock or Apple stock during a capital raise. This was a transaction funded in Bitcoin. Scilex injected Bitcoin to purchase a pre-funded warrant for nearly 264 million shares of Datavault. When you do the math, this issuance ballooned the outstanding share count, which explains the discrepancy you might see on different financial portals. Regarding its market cap, some sources might still show it as a $60 million company, but the reality is that with these new shares, the market capitalization has surged toward the $600 million mark. This is a fundamental disconnect that creates opportunity and risk in equal measure. The drop to $2.13 is the market trying to find the equilibrium price for a stock that suddenly has 10 times the share count but also holds a massive war chest of digital assets and a new strategic mandate. When you look at the intraday chart from Wednesday, you see the classic signature of a stock in discovery mode. It opened higher at $2.26, attempted to push toward $2.29, and then was slowly ground down by selling pressure to the $2.13 close. This selling pressure is natural when a company issues millions of new shares. The dilution fear is the first reaction. However, the counter-narrative, the reality that challenges the bearish expectation, is what the smart money is looking at. Why would a company like Scilex invest hundreds of millions of Bitcoin into Datavault? The answer lies in the name, data. We are living in a time where data is the new oil, and Datavault is positioning itself to be the refinery. Unlike the established giants like Nvidia stock, which provides the shovels for the AI gold rush, Datavault is attempting to monetize the soil itself, the raw data that powers these models. They are moving into real-world asset tokenization and data valuation. This is a high-beta, high-risk play on the convergence of blockchain and AI. If you are using a Fidelity trading platform or browsing your Robinhood app, you rarely see a company pivot this hard. Usually a business evolves slowly. Datavault has essentially torn up the floorboards and replaced them with servers and crypto wallets overnight. Let's pause for a moment and look at the broader context of how you might be approaching this trade, whether you are using Schwab Intelligent Portfolios for a passive approach or engaging in active self-investing through interactive brokers. The principles of risk management here are paramount. This is not a set-it-and-forget-it holding like a blue-chip dividend payer. This is a venture capital-style bet that happens to be publicly traded. If you are managing your own funds via online investment platforms or seeking investment help, you must understand that DVLT is currently trading on news flow and capital structure changes, not on trailing 12-month earnings. The investors buying at $2.13 are betting that the Bitcoin on the balance sheet and the new Verify U platform will generate a valuation far higher than the current price. They are looking at the Scilex deal not as dilution, but as a partnership that validates the technology. Those selling are looking at the massive share issuance and running for the exits to protect their capital. This tug-of-war is what creates the volatility and is why the stock is down 3%, while the underlying asset value might have just increased dramatically. I want you to take a second and think about your own portfolio strategy with high-risk pivots like this. Comment below how many shares of Datavault Inc. you currently hold, or if you are waiting for the dust to settle from this massive share issuance before entering. Do you trust a company that pivots from audio to AI and crypto so quickly, or do you see it as a red flag? Let me know in the comments. Now, let's analyze the business model that Datavault is actually proposing, because this is where the expectation versus reality dynamic gets most interesting. The expectation is that this is just another company slapping AI on its name to pump the stock price. We have seen this countless times in the last 2 years. A mining company becomes a blockchain company. A tea company becomes a blockchain company. It makes investors cynical. However, Datavault's move is backed by significant intellectual property. They aren't just a shell. They possess a portfolio of patents related to data transmission and verification. The Verify U system they are rolling out is designed to tackle one of the biggest problems in the digital age: identity and authenticity. In a world flooded with deepfakes and AI-generated noise, being able to mathematically prove the origin and ownership of data is incredibly valuable. This is the Data Vault concept, a secure, auditable repository for high-value digital assets. By integrating this with blockchain technology, hence the Bitcoin connection, they are trying to build a platform where companies can monetize their data securely. It is a complex pitch, far more complex than selling wireless speakers, which is what they used to do. This complexity is a barrier to entry for the average retail investor using SoFi investing or the Robinhood cash management features, but it is catnip for institutional investors looking for asymmetric upside. The comparison to other market leaders is instructive here. When you look at Palantir, you see a company that helps governments and corporations make sense of data. When you look at Snowflake, you see a company that stores data. Datavault is trying to be the layer that values and tokenizes that data. It is a nascent sector. The fact that they are accepting Bitcoin for their shares and holding Bitcoin on their balance sheet also turns DVLT into a proxy for the crypto market. If Bitcoin rallies to $100,000 or $150,000, Datavault's balance sheet expands automatically, regardless of their operational success. This correlates the stock with the crypto sector, much like MicroStrategy or certain mining stocks. So, when you are watching the price of Bitcoin, you are now implicitly watching the book value of Datavault. This adds a layer of macro risk and reward that wasn't there a month ago. If you are an investor who uses interactive brokers' trading tools to track correlations, you need to add Bitcoin to your overlay for DVLT. The volume we saw on Wednesday, over 25 million shares traded, is massive relative to the stock's history. To put that in perspective, for a stock that often traded a few 100,000 shares a day in its previous life as Summit Semiconductor, this is a tsunami of liquidity. This liquidity is crucial. It means institutions are involved. You do not get 25 million shares of volume from retail traders on their lunch break using the Fidelity mobile app alone. There is heavy hand-to-hand combat happening between large holders. The Scilex warrant exercise means there are a lot of new shares that could theoretically hit the market, creating an overhang. An overhang is when investors fear that a large shareholder will dump stock, suppressing the price. This fear is likely what is keeping the stock pinned near $2.13. If Scilex decides to hold long-term, that supply constraint disappears, and the price could move rapidly to the upside. If they decide to liquidate to raise cash for their own operations, the price could struggle. This is the game theory aspect of the trade that you have to master if you want to survive in individual brokerage accounts. We must also discuss the technicals. The stock is currently sitting in a consolidation zone. It had a massive run-up on the news of the deal, followed by a pullback as the details of the dilution came to light. The $2 level is a psychological and technical support. If it breaks below $2,